High-yield junk debt hits all-time highs. Will stocks hit all-time highs next? We'll also try to answer the question, will Federal Reserve be forced to lower interest rates, or will the market just sort itself out? We'll also look at Solana and Bitcoin, as they seem to be going down, and Solana actually gave us a sell or a short signal. And we'll finish up with gold, which could be forming a triple top. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 30th, 2025. As always, hit the like button, subscribe to this channel, make a comment, share this video. This is what keeps this channel going and helps promote it. If you're a subscriber, stay tuned. We'll be covering quite a bit of various securities, market breadth, crude oil, ETFs, foreign ETFs, large cap stocks, some of the interesting sounding speculative securities such as digital Turbine, Pagaya tech, as well as psychedelic firm ATAI. I have a position in ATAI. We'll also look at some of the gold and silver related. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can find out more by going to the link in the description and signing up. Here are those indicators. You can see those green, blue, red, and yellow lines. Basically, they help me trade. They help me determine the prevailing trend, as well as at what price level to buy or to sell the security. So currently we're looking at high-yield bonds, ticker symbol JNK, also known as junk debt. So we just today hit an all-time high. We've never been here before. So an all-time high for high-yield bonds is, quite impressive. We can also look at it on the weekly time frame, and you can obviously see that it also hit an all-time high. So an interesting thing about high-yield bonds is that notice that during this recent freakout from February into April, when stocks sort of collapsed and we had very strong selling, so notice that this is the S&P 500. Notice how deep the selling was and how far we got down. We got down all the way to the yellow line. In fact, we pierced through it. So technically speaking, we actually entered the bear market, but then we just reversed. So we had a V-shaped reversal. Very deep, very steep, also very short. So notice that high-yield bonds never got that deep. We got through the blue line. We almost got to the red line, but we never actually got to the yellow line. Now, also you have to realize that I'm using high-yield bonds, ticker symbol JNK, which is adjusted for dividends. Notice down here it says adjusted. So if I uncheck the adjusted, you can see the chart would look completely different. But since there's so many dividends or coupon yield in this for the security, I think it's better to actually use the dividend as a part of total return. So why do I care about high-yield bonds? Because high-yield bonds correlate highly to S&P 500. And when I say correlate, I mean, let me see. I mean, they mostly do the same thing as the S&P 500. So notice on this chart we have high-yield bonds, and down below here we have what's called a correlation coefficient to the S&P 500. So junk debt correlates highly. It does the same thing, or more or less the same thing as the S&P 500. That's why we want to see what the high-yield bonds are doing during the bull market and obviously during the bear market. So we can actually look during the bear market of, let's say, 2008. High-yield bonds collapsed just like S&P 500. Notice it was up here and then just went. I mean, it halved. And notice that correlation coefficient was very positive. In other words, during the downtrend, S&P 500 and high-yield bonds are doing the same thing, and during the uptrend, the same thing happens. We are seeing new highs and S&P 500 and junk that correlates highly. So now we're seeing new highs for high yield bonds. This is, I think, a very good indication that I think that junk debt, or at least bond investors, bond traders, are somewhat more savvy than the stock traders. So seeing high yield bonds hit record highs makes me feel better about the fate of the stock market. I think stock market will hit record highs. We just don't know exactly when, so let's try and figure that out. So currently we're looking at the S&P 500, and notice that, again, I just showed that high yield bonds already hit all-time highs, while the S&P 500 is slightly behind. So we're not that far off. We're about, probably a couple of percentage points away. We're currently 3.5%, about 4% away from record high. So we're approaching records. And I think that since the junk debt already hit records, then it's only a matter of time before S&P 500 does the same thing. So to us at Master Charts Trading, to my subscribers and myself included, it means we should not entertain any short positions right now. We should only think about buying. And this is exactly what we're doing. We're buying stocks, we're buying ETFs, and we're basically, expecting new records. So when are they going to happen? When are they going to come in? When the records are going to come in? Let's try to see. We can try to find, sort of where that is going by looking maybe at the 4-hour chart. So this is a 4-hour chart of S&P 500, and on it you can kind of see two unfilled gaps. So gap up is a very good sign, means that there's present of a lot of buyers, and there was just nobody was selling here. So price actually had to gap higher to get to the sellers. And so we had the first gap up from April 22nd, and then we had another gap up from May 12th, and both of them remain unfilled, meaning that sometime in the future, most likely these gaps will get filled. We just don't know when. So the question, of course, is will these gaps, you can kind of see them on this chart, there it is where I'm hovering, and there's another one where I'm hovering. So will these gaps get filled before we hit records or after we hit records? Since junk debt already hit all-time highs, there is a good chance we won't fill these gaps immediately, and most likely we will hit new records sometime in the near future. Why that is happening is an entirely different story. Technical analysis, what I'm showing here, really doesn't care about why things are happening. We're just reacting, or we're using analysis to predict or anticipate where we want to be placing, where we want to be trading. We want to be buying, we want to be selling. So in this case, definitely we want to be buying. At what price level we want to be buying? Well, the alert was already sent out. This is alert right there where I'm hovering on 2nd of May. Alert was sent out. Actually, target was already reached, so I would be at this point, I would be moving my stop to entry. Here's that here's that alert on S&P 500 ETF SPY. This is an actual alert to my subscribers that went out on May 2nd. Target was reached on May 14th, and I would be holding this position. I'm also holding myself QQQ, or Nasdaq 100 ETF. I also bought myself on 7th of May. Target was reached a few days later on the 13th rather. So I moved my stop to entry. I'm sitting in a position. So we're very close to records. And actually today's price action is quite bullish. Notice today's candlestick looks like a hammer, sort of hammer-like candlestick, so a large handle and a small green top. I mean, ideally we should have closed above the green line, but I think this is a pretty bullish candle, so we will be again holding this into the weekend, and let's see what happens over the on Monday. Now the other point I wanted to make, we're currently looking at 30-year Treasury bond yield, so ticker symbol TYX. We came very close to hitting an 18-year high. In fact, I think we actually touched the same level. So this is a yield. So the high from this date, October 23rd, 2023, was 5.15, so 5.15%. And last week we hit 5.15% as well. So we actually touched that same level. However, we haven't made a new 18-year high. Why 18-year high? Because we have to go back 18 years to see the same levels for the yield. So it has to go back to 2008, 2007, 2008. Pretty significant. So at this point, we are, what are we expecting from the interest rates? Right now, the interest rates have been coming down over the past few sessions. And by extension, TLT, the 20-year Treasury bond fund, was kind of attempting to bottom and rallied. So for now, I am moderately optimistic. And if you read some of the headlines, already there were headlines such as President Trump is thinking that Federal Reserve Chairman Jerome Powell is wrong by not lowering the interest rates. Is he wrong? Perhaps, but if we're looking at just pure market capitalism, so to speak, the markets are already sort of pricing in this. So the TLT or the Treasury bond yield actually is coming down without any intervention. And by extension, Treasury bond funds are rallying. So we are long Treasury bonds. For example, IEF. This is 7 to 10 year Treasury bond fund, and the alert was just sent out. I would be holding it long. TLT again is a longer term bond, and it sort of has a higher volatility than some of the shorter duration securities. So let's see what happens. I think perhaps Jerome Powell is doing the right thing by not really budging on the interest rates yet, because it's kind of good that he has room to maneuver. We're close to 18-year highs, so definitely even if he lowers interest rates, then we have room to fall. By extension, Treasury bonds would have room to run to the upside. So I would just, for now, I would be long Treasury bonds, especially intermediate and short-term ones. Does that mean that, usually Treasury bonds sort of, go up when stocks are going down? It's not like as clear. Okay, I can actually show you the correlations. So here's TLT and correlation to the S&P 500. So the correlation to the S&P of TLT to the S&P 500 is not as clear, but it's generally speaking negative. So in other words, when bonds are going up, again, very general, because you can see it's all over the place, really. Very generally, when bonds are going up, stocks are going down, but not always. Sometimes there's a prolonged period of, same thing happening. Like for example, here in 2021, looks like we're doing the same thing as S&P 500 for like 2 years, 21, 22. So not as clear cut, but the general belief is that investors buy bonds when they no longer want to own stocks. Is this because we're going to have a recession? Yeah, not necessarily. The correlations are not very clear, and I think I'm more free market capitalist than I don't really like to see manipulation of the market too much. Of course, that occasionally happens, and there's no way to avoid it. But by and large, I would like to see markets just sort themselves out. Okay, so that's bonds, stocks, and now I wanted to look at some of the cryptocurrencies that we're also looking that we also trade. So this is Bitcoin. I personally own Bitcoin. I bought a few weeks ago on April 22nd here at around 90,000 or 91,000 or so. And it worked really well so far. It went in my favor. So I'm sitting in my position right now, and actually we hit new all-time highs. So it looks pretty good. So right now we're pulling back towards this green support resistance line. And normally I just take some profits just around this green line to lock in some profits. My stop is already above my entry. So I definitely cannot lose any money, but it would be nice to make some money. So most likely, if we hit this green line, I will take some profits. The green line is at 103,000, 103K. So we will, just play it by ear at this point. Now, another security that we follow is Solana. This Solana thing hasn't been around for that long, but it does pretty much the same thing as all securities really do. So Solana actually went into a bear market during this whole February to April freakout, and now bottomed out around April 7th and then rallied. So where did it rally to? It rallied to this green red support resistance line. Again, you can find out more about them by going in the description. But basically, this is a bearish security because it has closed below the red line. For Forex, we use the blue and the red line. This is a Forex-like security. So we closed below the red line. We rallied back towards the red line, and now we have again closed below it. So technically speaking, this is a sell signal, a short signal. So it's if we to trust this, most likely we will at least hit the yellow line, possibly make new lows. Now, the correlations between various cryptocurrencies is really large. In this case, Bitcoin, you can see also bottomed out on 7th of April and rallied. However, it rallied towards records. As you can see, Solana actually hit records a little bit earlier. So right now we're seeing if Solana will pull Bitcoin down. Will it pull Bitcoin down? Well, that's a very good question. Solana is, hasn't been really around that long, so not as easy to. Sometimes it's easier to trade securities which have longer, been around for a longer time because we have more data. So, looking like Bitcoin will at the very least retest this 103K level. Solana very likely will retest this yellow line at around 126. It's currently at 156. So quite likely we're seeing at least 18% down for Solana. So Bitcoin might be doing the same thing as well. Right, let's move on and look at the dollar currency index. We're currently looking at the DXY, US dollar currency index. So also bottomed out around late April and 21st of April here and rallied very weakly. I thought we were going to get to the red line, but we haven't even gotten there, and we actually collapsed again and almost came to new lows. So right now we are very precarious. Notice that we closed below this yellow line on the 21st of May and haven't been able to get above it since. So we're right now again very dangerous situation. We could just continue lower. Where is this all taking us? Well, gold by extension is since it's traded in dollars, gold divided by USD. Gold has been taking advantage of weaker dollar. So since mid-May we're kind of bounced higher. Notice that since mid-May we're kind of been lower, moving lower for the dollar. So right now gold is quite close to the records, but I just can't help my thinking that this could be a triple top, like a descending series of peaks for gold, especially if dollar somehow manages to hold on and rally. And if dollar manages to rally, and especially if it manages to get above this red line, then we could see gold come under pretty severe pressure, and most likely, at the very least, retest this blue line to around 3,000, but possibly go even lower. All right, if you're a subscriber, stay tuned. We'll be covering lots of various securities, crude oil, for example, and then also market breadth. I'll be covering market breadth separately for the members only section. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. I have 2 different subscriptions, and I have a bundle as well. So trading indicators are these lines on the chart. So for example, I was just giving an example of Solana. So this is a daily chart for Solana, but you can actually trade on any time frame. So like, for example, this is a 5-second time frame for Solana. So you could have, if you had my indicators and you had access to a trading platform, trade for example Solana on 5-second charts, and you can see that the indicators provide very nice areas of where you want to buy and sell. So in this case, where I just marked, this would have been a opportunity to buy Solana on a 5-second chart. Obviously, you will need very large capital or a leveraged capital to trade on daily, on very short time frames. But of course, you can also trade stocks. I trade stocks using my indicators. Here's Boeing, for example. Recently, I bought Boeing on 24th of April. It immediately went in my favor very nicely. Now we're actually making new 52-week highs. So I'm still sitting in a position. My stop is already above my entry. My stop is currently at the blue line. So this is how we trade stocks. Usually for stocks, I normally trade only on daily chart or on weekly chart if we go to weekly charts as well. If you're trading something on intraday, then you may want to use continuous security. For example, you can trade euro versus US dollar. So there's euro versus US dollar, for example, on the 4-hour chart. So you can see that opportunity to buy euro on the 4-hour chart where I just marked. So those are the indicators. You can get them by going to MasterChartsTrading.com and then signing up for them on my site. Once you sign up, I will open the door for you on TradingView.com. So TradingView.com is this interface right here. Now, if you don't want to have your own indicators, you don't really need to. You can just listen to what I send out. I send out daily alerts, so I send out daily newsletters, and as well as weekly members-only videos. That is, for example, this week we'll be covering all of the securities and that we trade. Lots of ETFs, large cap stocks, some speculative securities, and as well as gold related. So that's indicators, also newsletters. And of course, the best deal is to get trading indicators and newsletters. I think it's the best deal, especially if you get the yearly subscription. You get 2 months free, as well as, of course, all of the memberships have free 7-day trial. You can also get a monthly subscription, but then you don't get the 2 free months that you get with the yearly. Thank you for staying with me until the very end of this video. If you have any questions, please let me know. Hit the like button, subscribe to this channel, make a comment, share this video. Thank you for watching and have another great trading week. Bye-bye.